Hey everyone, Bobby here. So this video is going to cover the post second quarter earnings, and I'm going to go over my thoughts as well as what I see coming up. Uh, for the main part, yeah, it wasn't the best in terms of presentation. So before earnings, I actually posted on X that this is, I think, what we need to see. The first thing was G2 financing. The second was the EBITDA framework for next year. Whether the G2 execution, if they can confirm that the capex is properly reset with contingency or no new technical news, to show that the clearway demand was solid for G2, second half of the quarter ramp, Section 232 with the economics, any clear path to funding, and then if they can color a little bit on the NRI best side. And then the best combination would be these three things. Now, they got two of them, which was that they did reaffirm that next year they can hit these targets and the additional G2 demand. But seems like the market really cares about the financing side the most. And one of the criticism I guess I have about the earnings is when you're going into earnings, I think management has to understand that the best earnings presentation that isn't presenting information that the market already knows. The best earnings is where you can answer pretty much every question the analyst has with your presentation. So that way the analyst can basically model out their projections, right? To get more institutions involved. And I think that's as far as the presentation went, it's more like a 7 out of 10. I think personally, I think they barely passed, mainly because uh, the problem there was really no new information that we already knew, right? So going to the earnings call here, if you guys watched it, I mean, look, presentation wise, it was great. It pretty much told us exactly kind of what we knew. I guess, the only new things that we found out was it was EBITDA positive because of the tariff refund, which I know some people say, well, the tariff refund's like a one-time thing, so it's like you can't really factor that in. But then at the same time, if they didn't have the tariff to begin with, they probably would have had the money anyway to begin with. See what I mean? So pretty much what I liked about this though is that again they did pretty much highlight all the important things, right? But I really wish that they sort of expanded on the unit economics because I remember I think it was Phil Shen from Roth that asked about the unit economics of the like how things look. And the problem was they didn't really give a clear number as to how Section 232 would affect the pricing. I think it's kind of double edged though because if you can't really tell uh, analysts what you're planning on charging, they can't really model exactly, what how they would re-rate it, right? Which is why so far there's three analysts that actually have come out so far. So Northland and Alliance basically just re-rate it, just reiterate their price targets, and no changes, right? The only change that I saw was the BTIG, where they raised it from 8 to 9. But pretty much all three of them highlighted the same risk, which is the G2 financing. Now, interestingly enough, uh, I do like how their gross margin, did pick up. But again, I think part of this was also because of the refund, possibly. Uh, but I'm going to show you guys some of what I think will happen down the line, just based on the information I have here. But again, just for future context, every earnings call, the best earnings call is where I think Microsoft crushed it for the second quarter earnings because they saw how Google fumbled and I think I'm not sure what the other one was, but they basically saw them fumble, right? And I think it was Google and Apple, right, that went and they basically learned like what analysts want to hear. And same thing with Amazon, right? Like they basically crushed it. So I think for the future, if management ever watches my videos, I think the key thing here is that all of this is great and all, but how does that help me as an analyst model my reports better, right? So for me, like if I have to model these numbers, I have to put a lot of assumptions in. But if I'm working for an institution, I can't put assumptions in. Like, I just got to put exactly what's in front of me, right? So, but because I'm retail, we know we have a bit of flexibility, right? So, interesting thing here is the production here. So, couple like a month and a half ago, I think no, it was a month ago. I think it was a couple weeks ago. I actually posted on Reddit about the targeted projections and where I think Q2 would guide. and they basically hit my numbers on the sales side. But this was really interesting to see that their second quarter productions, are higher than the first still here, which means what indicates is that they're preparing for Q3 and Q4 ramp. As far as for the rest of the year, I think they have to average like 1.25 gigawatts a quarter, which to me is possible just because it's only like a 30% jump from where their current production is for next quarter. Not only that, it's about a 35% increase from quarter to quarter. So that was pretty good to see. The margins are great here. And actually, I'm going to go pull up here on stock. So look, if you look at the company so far, the last two quarters have actually been pretty solid. I know that we're still negative on the EPS side here, but if you look at last year's in general, you can see that it's way better than going into this year, right? So there is a chance that we may hit positive EBITDA this year. I think so, just because of the tax credits that they can monetize on. If they have that monetization available towards the end of the year in a little bit, I could see us probably breaking even on the EPS side, possibly. It just depends on how the next two quarters go and what their average selling price is. So, and again, the problem is we don't really know, right? I think the reason management probably didn't disclose that is, I probably wouldn't want to disclose my pricing if, I'm trying to get the best deal possible. But at the same time, again, it just makes the job harder. Ultimately, this was all great and all, but the key thing here is the G2 financing, right? That's basically what everyone wanted to know. And the reason price here, as you can see, the reason price has sort of basically drifted downwards here, and we had that nasty little drop here, is just because that the market is basically discounting whether or not T1 can get G2 done. Now, I believe they can, right? This is why I'm still long on it. This is why I think, again, not financial advice, right? But if I had more money to put into this, like, I would still be buying at these prices, because I think a lot of this is technical. It is news driven. It is fundamental driven, right? In a sense, because the market's pricing in the G2 side, right? Because management hasn't, kind of given their plan as to how they're going to finance it. Now, I had this conversation with another shareholder, and if you look at their timeline here, I actually think that the reason they've been delaying this is, I actually think that they're probably trying to get a government-backed financing. So this is all speculation, okay? But if you look at kind of like how they talked about this in the earnings call, so I'm going to actually scroll all the way down because I actually summarize it for someone else here. Here we go. So I just have a hunch that they're pursuing some sort of like Department of Energy LPO-backed financing. So if you go back into late 2025, the debt-based structure was already in the plan. So it was like last October, Evan talked about how they intended to use debt as a foundation for the G2 capital stack, right? But because there was such strong institutional equity demand, he basically said that they're going to change the sequence and raise equity first, and they're going to still try to pursue debt-based structure, right? And then on the November Q3 call, management said that those raises allowed them to keep G2 moving while they engage, prospective debt investors and advance traditional project financing and so on. So if you look at the transcript, they talked about being sensitive to dilution and trying to optimize the capital stack. And then you fast forward to Q1 of 2026, and management basically said, "Oh yeah, like we have a tentative date for sometime in Q2," and then around April they raised 160 million at 4% convertible notes, right, due 2031. So my guess is that April could have served a similar purpose to the current July raise. Like, my thinking is actually that all these raises we've been seeing on the capital stack might have just been temporary, because the long-term plan was to get debt that was financing that's debt-based, right? But I keep thinking to myself here, though, is like, why is it taking so long? And who is this counterparty that is going to give this sort of halo effect, right? So if you look at the timing from Q2, so then we went from May, June, July, now August, right? And management hasn't abandoned the same debt heavy solution, and they're so positive about it. And I'm like, who is this counterparty that they keep chasing after? Because what's weird to me is that they keep talking about trying to raise this capital, and then they have to raise a bridge loan to still get that capital that they're aiming for. But at this point, they only need 250 million, right? And if they're able to raise 120, 160 like that, what's another 250 million, right? So then I asked and then on this earnings call on Q2, what was interesting was the language that Daniel basically talked about, and he basically said something on the along the lines. I have it right here. He basically with the second quarter, some of the higher cost was actually due to legal expenses, right? And I was like, huh, that's strange. Like, why are the legal costs a lot higher? I'm not sure if it was here or it might have been in the transcript, but basically in the transcript, he basically said that the extra cost was for like lobbying. Well, not really lobbying, but it's around government policy and financing. I'm like, what is this financing related work that's required this all this time, legal expense and government policy when T1's ready to go, and they're able to secure 120 million bridge immediately when they need it, right? So to me, it's not that they're struggling to find capital, and that's why I think the market's kind of overreacting to the G2 side, because they've shown that they can raise money when they need it. But then Daniel also said that it's heavy amount of both legal lobbying, extensive work around commerce, a lot of capital markets and fundraising activities. So he's like, okay, so this legal cost is going towards fundraising, but like they've shown that they can go and raise private money really, really fast. So that, and then if you look at the timeline, right? Here's what's interesting is that if you think about the timeline here, I think the government money starts making sense. Again, this is a theory, right? This is just a hunch. But I'm like, why are they going through all this like pain and watching the share price drop? Investors are up their ass about like what's happening with G2, and their only explanation is, yeah, like we basically have everything ready. They actually, I think Evan said on this call that they're just waiting, basically, like it's in the counterparty's hands, basically, right? So then I thought about this, and I'm like, okay, it might have to be government. Well, which government entity are they going after? Behold, uh, if you remember the Freyr timeline, right? So they used to be Freyr batteries before they switched to T1. What's interesting enough is back when they were Freyr, they actually applied for a DOE LPO loan, and it's called Title 17, and it takes 6 months to a year from application to conditional commitment. And again, Evan says like we don't what we need to do is taking a little bit longer in the Q2 call. And the other word and language he used was prime existing debt structure. Well, that's a lot of work just for 200 to 250 million. So like, why are we talking about priming existing debt structure if all T1 needs is 200 to 250 mil, right? And I'm like, maybe this isn't that G2 needs this amount. Maybe that they're looking for more permanent capital structure. Maybe they're trying to raise more money. And with the DOE, again, they tried to do this when they were Freyr. And then what happened was, this was around like October, November, I think, of 2024. What's interesting enough is around that same time, Q Cells got a $1.45 billion loan from the DOE. And that same month, Freyr decided to pivot to T1. And then like 5-6 months later, Andy Munro, who worked for Q Cells on the legal side, came on and joined T1 Energy as their chief legal. So I'm just, again, this is all a theory and speculating, right? But I'm just looking at the timeline and I'm like wondering, like, they keep pushing the deadline back. Wait, and it got to me. What counterparty would be this pain of an ass dicking around, pushing the timeline further and further back? There's no way any private counterparty would do this much extensive work, right? And then it hit me that it's probably public money, that they're going after the public markets. And lo and behold, it might be a Title 17 loan, right? Now, some might ask, well, if that's the case, why hasn't management disclosed that? If you think about Title 17 and getting this loan here, it's kind of like you don't want to promise shareholders that you are going to get this loan because it's not on your timeline. But if you look at the language they've been using, such as like they've due diligence, ready, waiting and such, the cost structure, quantum, duration, to me, I think this makes sense, right? I think if you just go and look at the wording they use in the earnings call, you kind of notice that they've been very deliberate about this. And I think Jeff, a friend of mine, actually messaged Jeff about this, and so he's like the head of the investor relations, and Jeff always directed him to like the specifics in earnings calls because of the you can't give material like non-public information, right? But what the thing Jeff also brought up is that they can raise money anytime, as they've shown. They can raise money anytime they need to. So why do I think it's government money? Think about it this way: if management has said that the halo effect, that this counterparty will bring a halo effect, what other halo effect than the U.S. government auditing T1 Energy, through the DOE and giving them funds, right? Because then that changes the narrative a lot, because the government basically says like this company is good enough for us to back. You guys know what other company that the government's backed that has done really, really well? Tesla, right? Tesla got a loan from the government, like, all the way back at the beginning, right? So anyhow, this is speculation, but to me that makes sense, because if the government actually gives them, even if it's 200, 250 bill, it's really not about the money that matters here. Because I know the DOE LPO is like treasury and 37 and a half basis points, which is like cheap on top of the treasury rates. But that's just my thesis, like thinking here, is that I think they might be going after public money. And if they're able to do that, like, good for them, right? Now, as far as the rest of the earnings call here, so look, again, analysts have already continued to BTIG raised the price. I'm waiting to see what Phil Shen says. But again, I didn't really like the call because, like, again, they covered everything that we already know, right? But again, here, okay, I even posted this on X. Dan specifically said here it's not necessarily lobbying, but to work on government policy, a lot of that work and for financing, right? And again, over here, the language they use: preferred finance solution, right? Counterparties, extremely confident. And CFO says, we've done what we need to do. It's taking a little bit longer. Again, none of this proves it, but the contrast is pretty interesting here. Now, Shay also pointed out that, look, like, I honestly think they did pretty well with their numbers here, because if you look at how they've performed here, I mean, look, like, net income, while it's a loss, it's nothing crazy like early in their year, right? So overall, like, they've been growing revenue, while gross profits have gone up, while operating income has basically stayed flat. So, like, look, operating income for compared to the previous quarter is basically the same. Net income is down slightly, but overall, I thought it was pretty good. Lastly, just to go over the option chain here. So basically, until we get another catalyst coming up, the current option chain has us drifting down right now. I do think that we will probably see some catalysts coming up maybe next week. I know today, because it's Friday, right? So we should start seeing some 13Fs coming out, and I think that's what's interesting here. So look, I know most people watching this, we're all retail traders, right? And pretty much stocks down quite a bit. Momentum is kind of also dried up a little bit here, right? But at the same time, this is, if you could see here, we rejected basically at the 630 wall, and that's not obviously good, right? Because if we close around these lows here for the week, the next week's setup isn't that great. So really, unless we see some decent catalyst, it might start drifting lower. But at the same time, volume's been pretty low the last week or so. So that's part of the drift, is kind of what I'm seeing. And also, short interest is like at an all-time high right now. If you check this out here, like we've already hit like 35% short interest according to Robinhood. I think some sites have that 40%. So I'm not too worried about this company, because again, look, at the end of the day, the only bear thesis here is they can't get G2 done. We literally have like 6 months left to go, basically. Not 6 months even. It's like there's like 4 more months left in the year, right? But I think to get G2 up and running, if it's going into Q1, like 6 months basically for this bear thesis to actually pan out. This doesn't look like a company that is financially distressed. They've shown that they can raise capital whenever they need to. I think, like I said, I think that, again, this is my theory here, but I think they are going after government money, just looking at the timeline. And if they're actually able to pull it off, because again, what's interesting here is that T1 has basically kind of copied QCell, if you think about it. My thinking is that they originally went with Freyr Battery, right? They tried to big this Giga America factory. But then what happened is they saw QCell get the loan for all this money. And I'm thinking, like, maybe they thought, oh shit, like maybe we shouldn't do battery because the margins. I mean, most battery companies, like, in terms of like margin wise, like it's not bad by all means, but I think there's a lot more policy tailwind with the solar side, basically, right? To build an energy infrastructure platform. So overall, what do I anticipate for next quarters? I do think we're going to see a ramp up. Like I think I got to plug these numbers in, but if they can hit like 1.2 gigawatts next quarter, I mean, that would be the highest revenue driven event of like to date. It'll be somewhere between 350 to 400 million is what I'm thinking, somewhere around there, revenue wise, right? And it also depends. And then if they hit that, then the following quarter is going to be even bigger, and then they're going to start positioning ramp and going into 2027, right? Because if they're producing like over a gigawatt a quarter at that point, I mean, 2027 looks pretty good. Not only that, they only need to get a couple more deals if you think about it, like because their nameplate volume is like 5 gigawatts a year. And Daniel also did talk about the phase 2 expansion after they get phase 1 done. So, they're probably going to need more capital for phase 2. But if you look at the breakdown of the earnings, I actually did put together some numbers here. So this is what has me like the most interested here as far as the numbers go. I modeled some here. Let me see. So check this out. With Section 232, so that's kicking in after December 4th, right? But check this out, right? So look, if the margins here were 19.6%, this is what it potentially looks like here at these selling prices. So if they get 32 to 38 cents with the tax credit at like 10 cents on the dollar, like this is phase 1 and phase like 2 together. Yeah, this is phase 1 and phase 2 together. If they're able to get this amount, I mean, look, this is basically what the full utilization looks like with phase 1 included. Without phase 1, this is going to be like, what is that? Like 7 cents, 6 cents probably. So if you take 4 cents out, it's still going to be like high 40s, low 50% margins, even at this selling price here. So I do see margin expansion being a big thing down the line. It's going to be another catalyst. And with the Evervolt IP purchase, that's going to save them. I think they did quote that they said the Evervolt saves about 25 to 40 mil a year, somewhere around. Let me see. Right here. Yeah, I think it was right here somewhere. Yeah, 25 to 40 mil a year, which is huge. So ultimately, the question is, can they turn this revenue into margin down the line? I mean, look, if they're already at like 19.6% right now, and they're still building out G2, and if once they're done with phase 1, and they're gonna pause for a little bit before they sanction phase 2, like I can see these margins growing. And even First Solar's margins, like they went from like 25% to like 50% last quarter. So like over like 2 years. So I do believe that margin wise, we're gonna see a margin expansion event, and then that's also gonna be a potential re-rating catalyst. But yeah, that's pretty much my thoughts so far for the Q2 side. I'm still holding, haven't sold it. If you're worried about T1, I mean, look, institutional ownership right now, I think, is at like over 70%, right? And if you look at the current short interest here, I mean, this is just crazy. Like it's setting up for a crazy squeeze. Not only that, if you look at the current demand needed right now, so look, so institutional ownership right now is over 73% right now. It's including the 13 Gs. So I really want to see what the second quarter here looks like. But if you look at the where is it? Oh, here it is. Like this is basically from the Berkeley lab here. You can see how much power is in queue right now. I mean, look, if you look at solar and storage here and look at gas, wind, like, come on, like, how can you not be bullish here, right? So yeah, that's pretty much it so far, guys. If you're at X and you want to join the T1 Energy chat that I put together, you can guys join. But overall, those are my thoughts. I'm gonna keep writing on T1 in the subreddit here. I know a lot of people think this is all copium and all, but like I said, like if institution ownership's high, analysts haven't changed their numbers down so far. They haven't re-rated it down yet after the earnings call. We're going to see 13Fs today. Next week, more analysts should be putting the numbers out. The most important one we want to see is Phil Shen's mainly. It'd be interesting to see what Sean Milligan updates it or not, because he's the one that derated it like down, like from 8 to 7. And I know Phil went from like 15 to 10, was it? So yeah, I mean, we'll see how it goes. But yeah, hopefully you guys are holding on, and see how it goes. All right.